Okay, reason number two, the IRS loves law firms like yours. You are financially lazy and disorganized. Disorganization, not taking the time to set this stuff up. The IRS loves you because you are missing tax deductions. You are missing out on implementing tax strategies. You are missing out on money that should be yours. Here's the thing, learning how to reduce your taxes is not necessarily easy. It's simple, but it's not easy. Okay. There are very simple solutions. The rules that you need to know are pretty straightforward. You just have to take the time to figure them out or get some people to help you figure them out. But if you don't invest in your own education, you'll be paying exponentially more every single year. There are like 10 tax strategies that everybody should know about that you can learn and implement over time and save yourself a tremendous amount of money. This is not rocket science. And here's the thing, your legal work is not more important than your business. A lot of people say, "Oh, I don't have time to get this organized. I don't have time to set up a separate, business bank account. I don't have time to do my books because I'm too busy doing all this amazing lawyer work that I'm doing." Not true. Your legal work is important. Your clients are important, but your business is important as well. If your business is not healthy, if it's not functioning properly, then you're going to be losing money and you're going to be losing time, kind of plugging holes and taking care of fires that you could use to provide a better service. A healthy, profitable business allows you to do your best legal work all day, every day. This laziness, this disorganization of what I'm talking about, common ways this manifests itself. Number one is mixing personal and business expenses. This is like the biggest no-no of all time. It's the bane of, accountants and bookkeepers' existence is when these two things get mixed. Then we have to rely on you, and you have to take your own time to go and sort all this stuff out. Tell us which transactions are personal, which transactions are business. Don't do that. Get a business credit card. This is the easiest thing you can do. And just anytime you have a business expense, put it on the card. When you get the statement for the month, pay the credit card with your business operating account, and you're good to go. If you don't have a credit card, we're talking about this a little bit later, but if you don't have a credit card, if you don't have lines of credit, if you don't have some sort of capital to work with, then you should get that. Having credit is not a bad thing with your law firm. Think of it as like bullets that you can use in the future. Another common pitfall, another thing I see all the time, avoiding bookkeeping until you can't take it anymore. Okay, or until you must do it. For example, it's February 4th. We're getting a bunch of calls for people that want us to do their books for 2024. We can do your books. It's probably going to, be relatively expensive because of the time crunch. But if you had taken the time to set this up and get your bookkeeping done and get a monthly P&L throughout the year, you wouldn't just be ready for tax time. You'd have a view into your business, the health of your business. You'd be able to catch problems before they arose, extra expenses that you don't need. You'd be able to do some tax planning. You'd be able to implement tax strategies, a whole bunch of fun stuff. You don't necessarily need to hire a bookkeeper to do this, although the money is worth it when you think about the time it's going to take you to do it. But don't wait until the end. And by the way, I've been 100% guilty of this before in the past. I've only recently gotten my financial self together in the last few years. But now that I'm to that place, seeing the difference that it makes, it's exponentially better. Side note also, and I mentioned this a little bit, clean books aren't just required for tax filing. They give you a financial snapshot of your law firm every month. I always say when I'm talking to people about business, about numbers, about success, about sales, ball don't lie. When I talk to people so again, I'm going to reference Brandon. Brandon and I are talking, "Hey, Brandon, how are your sales numbers?" "Oh, they're pretty good. Like what's your sign up percentage?" "Oh, it's like 70%. I'm like, "Are you keeping track of this?" "No, it's just a feeling." Same thing happens with your firm, with your business. What you feel like you're doing and what you're actually doing, you want those to add up. And the way that those add up is by actually seeing the books, actually seeing the numbers. And if they're not what you want, that's okay, because at least you know and you can change it. If you are spending more money than you're making every month, this is not good. And you can't know that unless you're doing some bookkeeping. Another way that we hide our heads in the sand, that we don't do what we're supposed to do, right? Is pretending your trust account is reconciled and hoping no one asks about it. This is something that we're all deathly afraid of. And I have been deathly afraid of this in the past as a law firm owner is, I don't know, I guess somebody calling and asking for your trust account reconciliation paperwork. I think the truth is That's probably never going to happen to you. You're never going to actually have to prove that your trust account is reconciled. That's my guess. Unless you're in California, where I think they're doing random requests for this stuff, only because their whole bar association has been a fiasco. Just Google that if you haven't heard about that. But you want to make sure that your trust account is reconciled for your own peace of mind. Reconciliation is super easy as well. Okay. If you just get in the habit of doing it, then it's not that hard. It requires three things. By the way, we're going to just dive into this real quick. Number one, you want to have a ledger for each individual client in the trust account and the money that you have put into the trust account for them. So you have like John Smith, and you're going to have just a running total with the number at the bottom. Okay, deposit 5K, withdraw 25K. Have the dates there. Okay, so you'll know what the total is. You're going to have one of those for each client. Then you're going to have a second ledger, which is just the overall trust account ledger. It's going to give you the total amount that is in your trust account, and it should be the sum of all of your individual ledgers. If you have a project management software, I think Leo will do this. I'm sure they all will do this, okay, in some way. So whatever you're using, just look into it. But you want to have individual client ledgers, and you want to have a main ledger that shows you the bottom line number that's in the trust account based on all of your individual client ledgers. When you have those two numbers, you're going to have a third number, which is going to be your trust account bank statement. Every month, you're going to have like a closing number. Okay. So, like on January 31, this was the amount that was in the trust account. You're going to get a statement that shows you that. Step one is going to be to compare your trust account statement with your client ledger with the big number of everybody added up. If they are the same, then you're pretty much good to go, because you can know all of your client matters are reconciled. And now you have the two trust account numbers reconciled. If those are off, then you're going to have to go into your individual accounts and make sure that those are all reconciled. Make sure that you haven't missed a withdrawal or a deposit somewhere to make sure they're filled up. Hopefully that makes sense, because your bank statement is not going to lie. It will show you everything that's come in and everything that's gone out. You want to keep these other records, though, just for your own business records. And then also, obviously, the bar, they want to know what the individual trust account amounts are. That's how you do reconciliation. Not doing that is going to cause you some problems, because if you're off in 1 month and then it keeps sort of building and you get more and more and more off, then it's hard to catch up. I've got a little trust account reconciliation training that I'm giving away. There is a sort of a form that I've created. It's a step-by-step. It walks you through what I just talked about to make your trust account reconciliation super simple. If you have a bookkeeper and they don't know what they're doing, you can even just give it to them and you can teach them how to do it. If you need a bookkeeper, though, I think we can probably help you. Okay. That's what we do. And then letting your financial organization slide due to time constraints. This is like one of the biggest excuses that I ever hear. We already talked about this a little bit. Yes, we know you're like all big, important lawyers and law firm owners. And myself, I feel that way sometimes as well. But if you don't maintain your business, you're not going to be able to maintain the level of service that you want with your clients. The idea that you don't have enough time to devote to this type of stuff is a lie. With like an hour a week, you can certainly learn all the things that you need to learn about tax strategies, implementation, and that kind of stuff. When it comes to doing your books, there's a little bit more time there. Hopefully you're going to outsource that, because, and we'll get to this in a minute, the bang for the buck is significant when you outsource your bookkeeping, when you outsource your accounting. Also, look, we are talking about this again. Again, I'm going to harp on this because I see this all the time. It's not okay to run your personal and business expenses on the same accounts. Get a business credit card, run your expenses on the business credit card, and then pay the credit card off every month with your operating account income. When people pay you, put the money in in your trust account or in the operating account, depending on how it's earned, right? Flat fees, operating account, retainers, trust account. Just do this. If you get in the habit of doing it, then it becomes really, really simple. If you guys are getting paid by Venmo, if you're getting paid by PayPal, I know there are some people do that, and it's just the nature of the beast. So I'm not saying don't take those types of payments, because sometimes, if you're in immigration, if you're in criminal defense, even in family law, sometimes people are just trying to pay you. They're coming with money from all kinds of different sources. Take that money and deposit it into your business operating account. It's super easy then to keep track of it and know what's going on. Also, I've already said this too, but I just like, these are such important concepts. I really want to make sure that they're hitting home. And that is you want to have access to credit for your business. If you want to make an investment, you need something to sort of get you over the edge. Your lack of attention to your finances results in fewer deductions, missed strategic opportunities, and mistakes that cost you thousands. Here's the other thing that I see all the time as well. When you don't have clean books, when you don't have these things set up in a systematic way, it's really hard for you to forecast and plan for the taxes that you're going to have to pay. Because here's the thing, when you start to make a lot of money, and hopefully all of you will or are, you're going to pay more taxes. The idea of zeroing out your taxes, it's possible, but often it takes more work and you have to put money in places that you don't want. And it's just not worth it to do that. So you're going to be paying taxes. It would be nice to know how much you're going to pay in taxes so you can start to set that aside throughout the year. That way, when that comes up, you can just pull the money out of your hopefully like high yield savings account where you're putting this stuff so it can grow and you can pay your taxes without having to worry about it at all. Because that first year, sometime you're going to have a jump. You're going to go from, small law firm to like, wow, this thing is growing. And that's the year when you get the tax bill that surprises you. The best part is it really doesn't take that much work to get organized. Just set aside a little bit of time and take care of business.